So Alex, you said that the company tried to offer low or even no fees for user, but how can you maintain the profitability for the company itself?
Thank you for that question. Actually, we have a profitability model. We expect to be profitable summer of next year. And actually, for us, we want to be the biggest earned wage access player in all of Southeast Asia. We're already the most multinational in terms of our geographic coverage. We are also the biggest. We have also achieved the most amount of volume. To date, we've processed around USD 58 million USD in terms of salaries transacted through our system, and we expect to get to 120 million by the end of the year. So. The idea is that actually we want to deliver volume. By being multinational and serving the biggest companies in the most reliable way, we have a very clear path to profitability, even with the lowest fees. And what's fascinating is that when you provide transparent, fixed, flat fees at a low rate, employees will actually utilize this more in order to manage their actual finances, lowering their debt burden as well. So these are all factors that we've actually seen where employees have actually deployed the solution as a regular part of their lives, as a financial management tool to pay for their bills, pay down their debt, and essentially be a smarter way to manage their finances. So we want to be, and going forward, actually, we want to become a fully well-rounded financial wellness solution. And so we have plans for deploying savings products where employees will be encouraged to save a part of their salary on a monthly basis and in a more regular manner, as well as insurance products. These are all designed to actually create a fully realized financial wellness platform for employees. And I mean, to answer your question again, I mean, all of these services, we don't necessarily need to get paid from the employees. We work together with the financial institutions, which also provide us incentive payments as well for deploying their financial products like savings. And so there are other income streams that we have that we can rely on. We do not have to all make it all from just the fees that the employees might be paying.
Would you spill maybe just a little the timeline or your path to profitability?
Sure. So we expect to be profitable in the end of the second quarter of 2025. So the idea is that we, because we are multi-market, we're serving, and in each market actually, we will be profitable at 100,000 active users. And we expect that we're in 4 different markets at the moment, and we expect to actually hit that number in the middle of next year. Yeah.
We're still looking for the policy from the Fed to cut rate. So we're still in an era of higher interest now.
Yes, correct.
How can you make profit based on this condition?
Yes, a great question. Because actually one of the core aspects of this business, the EWA business, is to make sure that for us, our cost of fund, so the funding sources has to be low. And so working with global banks like Citi, working with regional banks like Hana Financial Group, these major banks that are partnered with us and that stand behind us are able to provide us our funding that powers this product at an extremely low rate, so all within like single digits. And therefore, so we're able to get the funds at an extremely cheap rate, which is why we're able to provide this service at such a low cost to the end users.
So most of your funding is come from the bank now.
Correct.
Can you say
yes.
How big is the percentage?
So actually all of it, all of our funding for that powers this product is coming from the financial institutions, the large financial institutions. And actually, that is one of the unique aspects of our system versus others, is that we don't have to rely on venture debt or other high-interest loans ourselves in order to deploy this product. So we're able to partner with major banks that stand behind us and provide us extremely low cost of fund at millions. I think we announced it as 290 billion rupiah. That is going to be shared between all of our region and on all of our markets. That powers this product, and actually that has been one of the most critical factors that allowed our offering to be differentiated. Yeah.
Okay, now we'll move to regulation. Do you think our regulation for EWA here is enough now?
I believe that actually, so we work very closely with the regulators in all of the markets, and we even provide comments to where the regulations should actually head. We've engaged with AFTEC very closely as well. And in the case of like certain markets, other markets, we've also gotten licenses where there are relevant ones that is applicable to us, like for instance in Korea, as well as Philippines and other markets. However, I think this product is still at the nascent stages. And so I think regulators are still deciding how to treat this product. And actually, we encourage regulation to come sooner rather than later. This transparency in regulation is good for everybody. It's good for the fintechs like ourselves. It's good for the companies themselves as well as employees. But if I could have a best practice that we would recommend is that this product has to be a low-fee product, if not free. As well as providing certain limits, which actually that needs to be clearly provided in order to provide the necessary guardrails so that the product itself is also used responsibly. Again, this is not a loan. It is not a salary advance. This is just accessing your wages and your salary on a real-time basis. But as Paywatch, as a representative of Paywatch, we're happy to engage with the regulators to come up with the best practices that we believe should be implemented.